Welcome everyone. So today we're gonna go through a technical, actually strategy, very fast forward, very fast actually, very straightforward, very simple steps, and yeah, it will be. I am guessing that in 30 minutes we will be done with it. So it will be a quite short sessions this Tuesday. So welcome everyone. As usual, this webinar is being recorded, so you're gonna receive the recordings within the week. Now, I need to go through the disclaimer warning as usual. This material provides a general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information is provided from reputable sources, and any information containing indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment leverage products is characterized by a certain degree of uncertainty and that any investment of this nature involves a high risk for which the user is solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leverage products such as Forex and derivatives may not be suitable for investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading. And if necessary, seek independent advice. Please read the full risk disclosure in our website. Great, so we're good to go. Webinars@agefm.com is our email address. Feel free to send us any question, query that you might have. It will be support team handling this email address, but in case that you need something from analyst, it will be myself and Michalis, of course, so feel free to ask anything you want. So, as I said, a very straightforward strategy. Not for many, it's for whoever understands it. So as I keep saying, guys, don't blindly follow strategies. Make sure that they satisfy your personality, your risk appetite, and in general that it fits you and you understand it. That's the major thing. We present many strategies, many indicators, many approaches. What matters is to use something that is suitable for you and you understand it and it works for you and etc. Okay, so crossing EMA intraday strategy. So crossing exponential moving average intraday strategy. If you're following us for years, you probably have seen me many times in our live sessions in social media using the 5 and 9 exponential moving average for our intraday analysis. And this is what we're gonna go through today, okay? So what signals the crossing of 2 or maybe sometimes even 3 exponential moving average means, and it's signals that you might take from a crossing. So when you should consider entering a trade, where you should set your target and stop loss, and what kind of risk management you should predetermine. So this strategy, the particular strategy we're gonna present, is for 4-hour and 1-hour time frame. Okay, but before we start, I need to make sure that we are all in line regarding some fundamental steps and fundamental things, let's say, before you actually enter the world, become a trader and invest your capital in online trading. So just this might be the 5 actually the very first 3 steps is something that you should always have in mind, and you should make sure that you have them and you are confident enough about these 3 things. I'm referring to system, discipline, and patience, because investing and trading is not just knowledge, okay? It's also emotions. It's your ability to control yourself. So even if you have the best system in the world, okay, if you don't have discipline and patience, then it won't work. It will not help you succeed. Why is that? Because you don't have the discipline, you have the patience to apply your system appropriately and properly, actually. So it's all about you. It's all about you improving yourself, acknowledge your weaknesses and biggest strengths as well, and try to work on those weaknesses. It's all about you. Okay? Can you accept the loss? If you can, then you have, okay, you are a step onwards. You cannot accept a loss, then what exactly are you doing in this kind of industry? And in general, when you're risking your money either by investing or trading, no matter where, I mean, any kind of product, if you cannot accept a loss, then this will be one of your biggest barriers to succeed, because it will not keep you patient, it will not keep you disciplined enough. And this might be for me, actually, it is discipline, patience, and in general the emotional control is more important than knowledge. Okay? And it's harder to work on yourself and your emotional control than learning. Good morning, Steve. Good morning. Welcome. So it's all about you. Second, you need to have a system. You need to be disciplined. You need to be patient. Third, risk management, capital protection. Never enter a trade if you have not predetermined your risk, if you have not predetermined your stop loss, your target, if you haven't your position size, if you haven't applied a risk management system, okay, that will protect your capital. Simple maths. And just something that, okay, that I have at the very end of the webinar as well, some suggestions for books that you can read, and maybe the number one in regards to the technicals, it might be it's the Reminiscence and the Trading in the Zone. So if you have not read those 2 books, go online, find either a copy or purchase the original or whatever but try to read those 2 books. It will just make you a better person, a better trader. Okay, so let's move on. Enough with the the psychology, right? So crossing exponential moving average intraday strategy. As I mentioned, it's something that you probably have seen me applying in the live sessions all the time. Is that and I can actually lately, and it's an appropriate actually strategy for 4-hour and 1-hour chart. Okay. Now for the daily and for 15 minutes chart, it needs some amendments, but but still we're referring to crossing EMAs, but maybe different settings. So for the 4-hour and 1 hour, a 5 and 9 exponential moving average seems more appropriate, while for the shorter or higher time frames, you need to amend the settings, but we're gonna see everything in a bit. Now, before the system now, okay, before we go in detail to see the particular system. These are the steps that you need to follow every morning, right? Every morning, your daily routine. If you have ever seen our webinars for keeping a trading journal and enjoy the steps, your daily, what you should do in a daily basis. This was a part of it. So the very first thing that you need to do is go through your charts. Okay, you might don't have 44 charts like myself, but go through all of your charts, all the assets that you are interested in. If it's FX majors, some particular Forex pairs, okay, scan, go through them, check the daily time frame to identify any overall any trends, okay, and write it down in your journal. If you're interested in gold and commodities mainly, go through that as well. I mean, in general, the very first thing that you need to do after you wake up and after using obviously all the overnight news that might have affected the market, you need to scan your charts. And I'm not referring to just random time frames. First of all, scan all the daily charts just to write down any trend changes, and to be confident regarding the overall direction of each asset. Okay, that should be early in the morning. Also, okay, obviously that depends on where you are in the world. I mean, are you in the European Open like myself? Are you in the Asia Open like, I don't know, some colleagues of mine? You need to adjust it with this way. Also, ideally will be if before you close it every night, if you're trading the US session, for example, prepare your charts for the next day with some key support, resistance levels, etc. But that's just that's not so significant as much as is every morning to go through all of your charts, spot the overall trends, write it down on your calendar before deciding on any early trade. So in case that you are available at the close, okay, and I'm referring to 12 o'clock server time, then you might consider placing some pending orders based by finding some trigger points in order to your position to automatically open during the night or early in the morning. Now, if you're not available in the server time, then as we said, scan your charts and you might consider entering the market very, very early in the morning before actually the European Open. But that's just depends. This is solely depends on your time zone, okay, and whether it fits your daily routine. Also, you might consider, as I said, I mentioned the pending orders. That's where that's where the leave alone basis is for. If you're a person that is not available during the day, you might consider pending positions on a so open position on a leave alone basis. Okay, so something opening position or pending position, or literally opening position every morning on the asset that actually trigger your attention and trigger any support or resistance levels, and place a trailing stop loss, your target, in order to be leave alone basis, to close automatically alone as soon as it reach your target, or as soon as the kick a stop loss. So feel confident enough to use trailing stop loss. Make sure that you always have a stop loss and a take profit in order not to be anxious the whole day for your positions. This is literally the definition of risk management. The definition of risk management is not only to make sure that you have placed your stop loss at an appropriate risk and reward at an appropriate level in order to satisfy a decent risk and reward ratio. Risk management is also actually placing an actual stop loss and placing an actual take profit at target level in order for the position to close automatically without any significant major losses or surprises. So risk management is not only the lot size, it's not only the position size, it's not only the risk that you're taking, it's literally having a stop loss. Never open a trade without a stop loss. Okay? I mean, it might be the most common and biggest mistakes that especially newbies do. It's literally is for anyone that it has the mentality of a gambler. If you not place a stop loss, that means you're a gambler, because you're risking your whole capital. Place stop loss always. Make sure that you protect your capital, your initial capital. Also, considering something that I have demonstrated several times in the past: multi-target trades is another risk management technique. By placing, let's say, 2 targets and doing all the appropriate calculations in order to risk the 80% of your position for the first target and just the remaining 20% for the target 2, this will lock you profits in case that the position reach the first target but fails to reach the second target. So it will lock you some profits. It's another risk management technique. Okay, yeah. This is just, let's say, an intro before the actual strategy. But these things that you need, it goes without saying that everyone, regardless of what kind of traders you are, whether you're a day trader, price action trader, momentum trader, whatever, and regardless of what type of trader you are, these are the essentials. Okay. If you want to find more about this, about risk management, multi-target trades, pending orders, trading journal, your daily routine, etc., we have dedicated webinars about them. Okay, so please, on your free time, don't hesitate to watch them. Now, Very easy, very straightforward. Is the crossing of 2 or sometimes 3 exponential moving averages in the 4-hour and 1-hour chart. We have spotted, and from experience we have seen that it works best for these 2 time frames. Okay, so obviously feel free to make some adjustments, but this is the system that we will present today. So with some entry rules and some criteria that you need to apply. First of all, we are using, as I said, 3 exponential moving average, the 9, the 5, and the 200. And it's only for the 4-hour chart initially, and then we go down to the 1-hour time frame. Also, we're using Bollingers. The deviation the deviation can be amended, okay? So usually the default one works just fine, but I mean the 2.5, sorry, works just fine. But if it's an asset that it might be way too volatile and you have noticed that it needs an adjustment, feel free to amend a bit the standard deviation. Also, ATR and RSI at the bottom of the chart, as you can see over here, and some extra, but I'm not using in this system the pivots, but in case that you prefer, you can use pivots and fractals. Now, there are some particular rules on how to apply this strategy. Okay, so first of all, you need to understand the crossings. So if the 5, which is a shorter time frame than the 9, a short-term exponential moving average than the 9 exponential moving average, okay, so if the 5 cross the 9 from below, that implies and signals a potential long position. If the 5 cross the 9 from above, then indicates weakness. So this is a sign for a short position. That's the first thing. Second, a break of the Bollinger Band midline. This is something that just adds to the sign of the cross of the two of the exponential moving average crossing. Okay, so we have the crossing, as you can see over here. We have the crossing, but confirmation came in the next session because not only the 5 remained above the 9, but also the price broke the midpoint of the moving average, okay, of the Bollingers, sorry, of the Bollingers. So that was the entry level. That was the entry level. So you can now, if both these rules, if both of these conditions are met, then you can place an order at the close of the time frame in the 1-hour chart, okay? So you need to, let me just, you can go down as soon as you see the next session to open above the midline of the Bollinger Band, you can go down from the 4-hour chart down to the 1-hour chart in order to enter a trade as soon as the 1-hour candle closes. Okay, is it clear? So that should be your entry level. Now, how you can decide your targets and your stop loss. You can either apply any kind of strategy that you want if you have one, or if you don't have one, you might consider using ATR, okay, for your target. So you can, with the ATR, you can use ATR as such. So 15 points, okay. I'll put my first target 15 points. If you're gonna apply multi-targets entry, so you might consider using also twice ATR. So that means 30. So if the entry was at 27.69, so plus 30, that's literally up to nearly, it will be 27.99, so 2800. So that could be your target level, either the single target level or the two targets. First target here, 15 points above, and the second target twice the ATR, which is, so you understand this? This is ATR once, and twice the ATR, that bridges to here. So we have two targets. So target 1 and target 2. Okay. Now, I haven't placed the stop loss over here, but nonetheless. Now, stop loss. Your stop loss, ideally, could be above or below the turn in the market. So, since here was the entry, you might consider using either a trailing stop loss based on the ATR, so half the ATR, so 7 points below the entry, so ATR divided by 2, so somewhere here you could be your stop loss, or use the previous low, so somewhere here. Okay, or you might consider so by applying the stop loss by using half of the ATR, that means that we have a risk and reward ratio 1 to 2, by the way. Okay. Or you might consider using the previous support area, right? So this looks another level that could be used as a nice stop loss level. So it depends if you're following a particular system to place your stop loss, feel free. A suggestion is the ATR. If not, you apply the one that you prefer, either the previous support and resistance level, the previous swing, any other indicator, Fibonacci's, or whatever, anything you want, or pivot point analysis, and you place your stop loss there, and so on and so forth. But for that particular system, the stop loss is placed above the latest high or latest low. So in this case, it should be sorry, it should be above the latest, below the latest low. So target 100% ATR is what we mentioned as well over here, and twice the ATR is that one over here for two targets strategy. Now, here's another example with 1 hour time frame right now. Yes, well spotted, Emeka. Thank you for noticing. Christopher is asking, you will measure the ATR value at 4 hours, not on 1 hour? Yes, my mistake for not clarifying. I used in this case the 1 hour only to spot entry, to enter, to find the entry level, because I didn't want to waste because you might don't want to waste any time waiting for this 4-hour candle to close. So you might be able, by going in the 1-hour time frame, to find your appropriate entry level, and basically should be at the close of the first hour after these two conditions have been met. Okay, even if one of them hasn't really, actually we're gonna see later on, so don't worry about it. So here, euro dollar in this case, 1 hour. Now, if you're at 1 hour, in general, you're trading just 1 hour time frames, or you have spotted this crossing in the 1 hour chart and not in the 4-hour chart. Okay, so you have, it also depends on where you will actually spot this signal, this crossing. So in the S&P 500, we spotted it in a 4-hour chart. In the euro dollar, we spotted it in 1 hour chart in this example over here. Okay, very old examples, but it doesn't matter. This happens day after day. So 5 and 9, exactly the same setup, ATR, RSI, Bollingers. I have some fractals on, and whoa, you look this beautiful. So in a single candle, we have seen both conditions being met. So having a crossing and also a breakout of the mid point of the Bollingers. So that was a clear bullish signal and a clear sign to go long. Okay, so entry can be either at the close or at the open on the next session, but the sooner the better. So at the close, you can consider opening an entry. And again, now you should place your target, your stop loss, and etc. So now the entry, as you can see over here, is at the close and is at the 122.05 level. Now the ATR is at, okay, right now it says over here 10, but at that very moment of the crossing it was 8. It was showing 8 points, 8 pips. So the target, so we can measure and we'll put the target 8 pips higher. So that takes us to 122.13. Now stop loss over here, based on the strategy, it needs to be at the latest low. This is what we mentioned earlier. So that goes down to 121.88. So that means if we measure the entry from the stop loss, that's nearly, let me measure it, 11 and 5, 16 pips away. 16 pips away. So 16 pips away, and the target is 8 pips away. So I have a risk and reward ratio 2 to 1. So I'm risking double of what I'm targeting. So that's the purpose of this examples, is to show you that sometimes, yes, this might happen, but you can use in this case a trailing stop. So you can keep this risk and reward ratio 2 to 1, but instead of placing a fixed stop loss here, place a trailing stop loss. So in order to, and add also another target, a target 2 or even a target 3, okay, in order to keep you in the market and the stop loss to move higher and higher as the price moves higher and higher. Okay, So don't be afraid because the risk and reward, the risk is double than the reward. If in this case, use trading stop loss and consider adding a second target as well. Okay. Now, another example. New Zealand dollar 1 hour. So we have the crossing all at once, actually similar with the past, crossing and a closure above the mid of the Bollingers. Perfect. So, sorry. Oops. So another is this is same approach, but look at that. Look at, that's the target and that's the stop loss. Okay, we might have benefit few pips, right? But look what we missed afterwards. That's why it's wise to check also the momentum and to consider the multi-target approach. As you can see in this example, not only we had the two signals that we wanted, I mean the crossing and the Bollingers, we noticed that the RSI was keep rising and keep pointing further upwards. So that means that the momentum continue, the bullish momentum was increasing and increasing and increasing. So if we had placed in this example a second target twice the ATR, so that means 78, 88, 98, so somewhere here, okay, and a trailing stop loss, we will have actually that will have keep us in the market until the asset breached the round 0.72 level. Also, that was a more appropriate stop loss than the one that the ATR suggested. Consider using the previous low. Now, just a second. 1, 2, 3, 4, 5, 6. Okay, now one more thing. Okay, now I will use the same example, but for a daily time frame, using the daily, the 200 day, the 200 period moving average to present you another approach. Okay, so far we have seen only the 5 and the 9 exponential moving average. Let's now put also the 200 exponential moving average. So all the rest, they remain the same. I mean, we keep using RSI, ATR, Bollingers, fractals if we want to, and so on and so forth. Now, okay, for the pivots is the next example, so bear with me, okay? So let's get back. Now, forget all these lines. Let me clear everything, erase everything. Now, that very moment, now this is another approach, okay? Now we have the 200 period in play. Okay, the entry is fixed, right? At the close, after we have seen the Bollingers and the crossing, the break above the mid of the Bollingers, and after we had a crossing of the 5 and 9. But look at that. Indeed, we did have these two conditions met, but at that very moment, not only we had a rising RSI, but also, okay, also we had actually the price moving well below the 200 period moving average. Okay, remember that price always returns at its average price. Okay, so another approach. Even if you have followed those particular steps and you have taken just a single target with the stop loss over here and an entry over here, okay? At that level over here where your target has been met, we have seen that there was a jump in the ATR and another jump in the RSI. So you might consider adding your existing position. So you might consider using, other than twice the ATR as a target, also your 200-day period, moving average. This is a second step. After you have placed your original target, okay, if for any reason you have further signs that the move will continue higher for longer, then you can extend your target higher, okay, and add, this is what we mean, add to it, add to your existing position. You can either leave the original position to close and open a new one with the target being at the 200 period moving average, or add to the existing position by shifting the target higher and taking your stop loss at your entry point in order to lock some profits. Are you okay? So do you understand what I mean? If for any reason after you place your original target you see that there is further room to the upside and you are gaining more signals that this trend will go higher for longer, for example, you might see rising momentum either from the RSI, either from the MACD, and jumping the ATR like this one, anything that could trigger your attention, you might consider either opening a new position or adding to the existing, and you can consider shifting the target to the 200 period moving average. So drag and drop it higher and drag and drop your stop loss to the entry point. Food for thought. Okay, now yeah, okay, here's, I don't need, I think, to present how you will apply indicators. If there is anyone that doesn't know how to apply indicators, please let me know. So we can move to the next one, to the next example, where you might consider a twist. So in this example, we have also used pivot points. Okay, so what's the twist in this strategy? This is a gold in 1 hour chart. Again, crossing of moving averages and a break above and a closure above the midline of the midline of the Bollingers. Now, what's the twist over here? The twist is that instead of closing at the ATR and re-enter, leave the trade to run and close on a cross of the 9 exponential moving average. While the stop loss, it could be at the Bollinger Band midline. Do you get that? Okay, so instead of closing at the ATR and then re-enter, okay, in case that you can see that there is further rising and increasing bullish bias and another and further resumption of an uptrend, let's say, you might consider re-enter, okay, so leave the trade to run and close it as soon as it crosses the 9 EMA. And the stop loss must shift it to the mid of the Bollinger. So target will go higher in order to close on a cross of the 9 EMA, and the stop loss will move higher as well on the midline. Okay. Now, for this particular strategy, it's good for you to focus initially on the majors. Okay, 4 hour, 1 hour, sometimes for a 30 minutes chart as well. Be careful though, majors such as the pound yen, because it's one of the most volatile of all. It has widened, let's say, I mean, it's very volatile. But this strategy can be applied also in such a volatile assets such as pound yen. Even it's an asset that there is a significant high volatility. So you know the spread depends on the liquidity and the volatility. So be careful with the risk management over there if you're gonna use assets that are they have really high volatility and in general high spreads. It's better if you use highly liquid pairs such as euro dollar, dollar yen, pound dollar, Aussie, euro pound as well, okay, because they tend to follow the laws of trending markets better. But for this is just okay, this what I mentioned over here is regarding applying this intraday strategy to 1 hour chart and lower. If you are in a 4 hour chart, don't worry, it can be applied everywhere. Everywhere, even in commodity stocks, indices, volatile assets, etc. Okay, for 4 hour, it's available for it's applicable everywhere. For 1 hour and lower, make sure that you use it for highly liquid pairs because they tend to follow the laws of trending markets much better. No, Christopher. No, Christopher. Try if you want to in a demo account, but it didn't give me sufficient results in order to claim that it can be applied in a daily time frame. No, because it's such a fast moving averages. It works very good for the particular time frames that I mentioned, but not for the daily. Feel free to check though. Yeah, but no, I haven't spotted an asset that by applying the daily time frame, this particular strategy and daily time frame gives me sufficient enough confidence and accurate, actually good signals and etc. In general, for any type of strategy that you might follow, even if it's the one that we presented today or any other strategy, make sure that you're always aware of liquidity, session changeovers, and any key new releases. This is something that it goes without saying nowadays. you need to be aware of the liquidity of the session changeovers, because the session changeovers is where we are seeing the the biggest volume, the biggest volatility, and the biggest volume. So by saying session changeover, if there is a clash at the European, there is a clash, as you know, at the moment the New York opens, and at the moment the London, actually the New York opens during the London Open, so there is a clash. So those first 2 hours of the New York Open, because also there is this changeover. There is the very first few hours are the most are the ones that we have seen the biggest volumes, the highest liquidities. So you need to be aware of these factors. You need to be aware of the liquidity of the session changeovers and any upcoming new releases. Always try to identify what the market is doing. That's why we mentioned that your very first step every morning is to scan your charts and see what your markets are doing. Are they trending? There is an uptrend in euro dollar. Is there a downtrend in the euro dollar? Is it ranging? And this is what you have to do before applying any system, to be able to be aware in advance the direction of the market, because by doing this, then you can place some major support and resistance levels, and you will make sure that you go in along with the trend, because trend is our friend. So you might be aware whether the overall trend is upwards or downwards. You will consider opening intraday positions that go along with the overall trend and not against it. Okay. Yeah. So that's pretty much it. The last few the last two basically slides were just some reminders, let's say, of what you should be careful about, and why I mentioned that you need to every morning scan your markets. Trend is your friend. So by being aware that, let's say, dollar index, has been in an upwards trend for a month now, then if your system in the 4-hour chart or in the 1-hour chart shows you some long positions, you will be confident enough to participate with really high targets, because trend is your friend. So you're going along with the trend. You're not going against the trend. So that was pretty much it, guys. It's very simple, but it needs a lot of practice. Okay. So it's simple, but it needs practice. It needs some adjustments in case you're, especially for finding your appropriate stop loss level and risk and reward ratio, and whether you're gonna use the ATR or not, or you're gonna use the latest low for your stop loss, or fractals for your stop loss, or pivot points for your stop loss, and etc. So it needs a bit of a practice, you know, to settle a bit, to be sure about your steps. But it's very, very simple. There will be a recording. Yes, don't worry if you have joined late. There will be a recording, and it will be sent within the week. Okay, thank you very much. So these are some books for further reading. But if you don't have the time, you don't like reading books or something, if I had to prioritize, okay, I will say the reminiscences, okay, and we'll go back to the beginning of the presentation and mention the trading in the zone. Okay, maybe that one first. So that's just some suggestions for further reading. Okay, excellent books. Books that if you find them online or borrow them or wherever, they will only improve you as a person and then as a trader. Okay, but also it has to do with focus on ourselves and controlling our emotions. So it's not solely about trading, it's also about discipline. It's about trading for living and not living for trading. Okay, thank you very much, guys. Have a great day ahead. Take care. Tomorrow we have another live session, another webinar with Michalis, and on Friday there will be a live streaming for the PCE data release. Thank you very much. Have a great day ahead. Take care.